Hey listeners, it's Paul Andriola here. Why not join our community at Small Cap Discoveries, where we offer our members direct access to some of the best microcap investment opportunities available. Our members are getting access to premium microcap financings, research reports, and direct access to management. Sign up today at www.smallcapdiscoveries.com.
Hi, everyone. Welcome to the Small Cap Discoveries conference call. Today on our call, we have CEO Nick Blitterswyk from UGE International for an update. UGE trades on the TSX Venture Exchange under the symbol UGE and on the OTC under UGEIF. The company is currently trading at $1.66 with roughly 32 million shares outstanding, or about a $53.5 million market cap. I'd now like to hand it over to Paul Andriola.
Thanks, Trevor. Always good to have Nick update us on the progress of the business, sort of near the end of the year. So we thought we'd get him in and sort of do a bit of a year in review. Also maybe talk a little bit about Q3 that came out just a couple of weeks ago. So Nick, great to have you back. And I'll just turn it over to you before we sort of jump into any sort of updates. Remind everybody what UGE International is all about.
Yeah, no, thanks so much, Paul, and Trevor as well. And great feedback and speaking with all of you again. So number one is, you guys have been kind enough to have UGE on twice before this year. Once was right at the beginning in January, and then once was pretty much mid-year in June. So, good to just kind of quickly check in on where we were then and where we've gone between then and now, because it's been a very busy year for us. We've been really busy for anybody who's been following the story. So, just off the top, a reminder, I think probably most people on the line already know. And if you don't, by the way, our deck is on our website and there's probably other places to hear the story, or feel free to reach out to us. I'm happy to walk anybody through the full story offline. But we're a solar developer focused on the mid-scale. So not the residential, not utility scale, but the mid-scale. That was traditionally commercial and industrial, and it's evolved primarily into community solar as the fastest growing segment of mid-scale and actually the fastest growing segment of the overall industry. So even the beginning of this year, it wasn't talked about that much in the public markets, but through the course of this year, there's been, number one is a company called Altus that just started trading on Friday, a SPAC transaction on the NASDAQ. And then also some other companies have there's been some research notes and stuff published around community solar, and that's the fastest growing part of the overall solar industry, and it's one that we pioneered in 2017, and that's been the biggest uptick in terms of growth of our story since then. So it's been fun to be involved in that and see that really take off in the overall market. But that's what we do is, we develop, build, finance, own, operate these projects. I started the company about 12 years ago. We've grown with the industry's growth. We've pivoted the business as the industry has changed and grown, and really feel like kind of came into this at like the right time, with a lot of blue sky in front of us over the last couple of years. So part of this is just from our investor deck on our website, but just to kind of highlight a few key points. The beginning of this year, we had a backlog of about 60 megawatts of projects, and so we were super excited about that. Our growth, actually, if I just flash that on the screen real quick, last year our growth had been from about 17 megawatts to about 60 megawatts throughout the year. And then this year, what you've seen is that as of November 22nd, our backlog had grown to 145 megawatts. And there's we can get into it in terms of like what that'll mean to UGE shareholders and returns we capture from these projects. But suffice to say, we're ahead of where we thought we'd be. And super excited about the way that UGE has been able to grow this year. So, the biggest thing for us this year has been just the size and scale of the company and how much we've grown. But within that, there's been a lot of like big wins that have added, the T-Mobile and Bloomberg logos probably stick out first and foremost. Two companies that we signed fairly large agreements with in terms of offtake of energy from the projects that we're developing. In particular, that T-Mobile one, we think was the first time something like this was done in the solar industry, where within the community solar framework, we were able to contract across many of T-Mobile's meters to offset 100% of their energy and from 100% of our projects, whereas community solars are usually a lot more convoluted than that. And then also we had an 81 site LOI that we signed with a large REIT who I think probably Q1 or maybe Q2 next year. Hopefully we'll be able to speak more publicly about that relationship and how that's scaling up. So I think two other points I'll mention here real quick is the backlog growth has been fantastic. That's on the back of a pipeline that's grown about 7x in the first 9 months of this year, and the overall pipeline plus backlog plus operating assets is now very close to a gigawatt, a scale that we never thought we'd be getting close to if we just thought back a couple of years ago. And then the other part that I'm happy to touch on a bit more, but there's a lot of policy updates and so on in the U.S. right now. The bipartisan infrastructure bill was passed November 15th, and then the Build Back Better Act. Every day I'm checking to see analyst reports on when they think that'll get passed. But that's really a big thing for UGE and for our industry, and so on. So that's a quick jumping around update in terms of what we've been up to this year.
Perfect. Why don't we key in a little bit on Q3? So we just put to bed your Q3. We talked to some of the metrics and some of the events there. Now, I did notice that the T-Mobile and Bloomberg stuff looks like it came in Q3, but other highlights of Q3. What can you tell us?
Yeah, so Q3, I think the growth in the backlog was the first thing. And backing up for a moment, as we are developing these projects, they go from our pipeline backlog into construction and then operational. 2021, at the beginning of this year, we talked about it as being the really key year for us to scale up and take more market share within this industry. And we had set this goal to double our backlog to 120. And as of November 22nd, we're 145. So that, not the leading indicator, pipeline would be that, but that securing the projects was really key, and we were very happy with how that's gone this year. The next piece is for those projects to fall into construction and into operating status, and that's what we're looking to really see start scaling up next year. So in our Q3s, you start to see that every quarter is a new record for us right now in terms of number of kilowatt hours that we're producing from our operating assets, but it's still very small compared with our goals. So as of Q3, we had 1.5-ish megawatts of operating projects. We also had about 1.5 megawatts in construction. So that means that probably within Q1, we'll see the operational assets double to about 3. But then in our Q3s, we also talked about between 10 and 11 megawatts that right now we're prepping for construction. So most, if not all of those, should be into construction by the end of Q1. So from 1.5 to 3 to adding another 10 or 11 to 13, that's sort of that very early stages that we're starting to see ramp up in a similar way on the operational assets. I think aside from that, that really is the story right now, right? Is we feel we're a much bigger, more valuable company than we look on our income statement right now, based on that pivot that we made from in essence getting one-time revenue to shifting to recurring revenue. So we probably every CEO's job is to say that they feel they're undervalued, but I think we're quite adamant on that based on the value we feel we're building up on the asset base. I was about to say balance sheet, but really the assets in our backlog and what we value those at.
Now, okay, so you mentioned going from 60 megawatts to 145 megawatts, and remind me again, how long did it take you to go from? Is that just over the course of the last year or the last 2 years?
11 months. Yeah.
11 months. Okay.
Yeah. It was 17 to 145 from the beginning of last year. So
okay,
2 years.
So, okay. So, pretty hefty pace of build of backlog. But if you were, give us a sense, 145 megawatts in backlog, what does that mean financially? If they were all built out now, give us a sense of what that means in dollars.
Yeah. For every 100 megawatts, we'd expect that to be about 15 to 18 million of project level EBITDA. So call it 18 to 21 million of recurring revenue. And our business is typically at least 25-year recurring revenue from these projects. So pick right now our overhead is between 5 and 6 million. These are all US dollar numbers. So first 100 megawatts, therefore, we'd expect at our current projection in excess of say 10 million of annual consolidated EBITDA. So 145 pretty much times that all by 1.5. Yeah, I'll say too that so two things. One is this goal here of the 100 plus 100 was something we set at the beginning of this year. And at that point, we expected to add about 60 megawatts of backlog this year. We're going to come very close to 100 megawatts of add this year, which in essence checks off that second goal 3 years early. But the point being is we're expecting now to be somewhat ahead of these goals. We haven't updated our goals or forecasts yet, but.
And remind us how you finance these things, because that's another neat part of this whole piece here.
Yeah. So I think people hear about the business and then they hear us say it's capital light, and people are like, there's a disconnect. How does that work? And in essence, we're so we get ready to build these assets, and they have, like in this case, 25 plus years of contracted revenue in essence sitting in front of them. And so there is this tax credit in the US that we monetize for part of the capital stack. But the biggest piece is like project or portfolio level debt, which is senior to the project, but non-recourse to the parents. It's just at the project level. And through that tax credit plus the debt for the project, we fully capitalize the capex of these projects and actually over-capitalize them to the point that we pull out what we call a developer fee as we build that out. So right now we're actually in the market with a few or with a number of banks for our next projects, that 10 or 11 megawatts that I mentioned. And so I think we went out to like 6 banks to get terms and see who was most competitive for that.
So really the capital you require, or the equity, if you want to call it that, is really to sort of pay the existing costs until you guys are break even on your projects. Is that correct?
Yeah, that's right. There's the 5 or 6 million of overhead that I mentioned earlier. And then, but if you think about how these cash flows flow, I will say that because, we talked earlier about EBITDA, right? So on the, that you can think of as a pretty flat measure through the life of those projects. The cash flow actually comes ahead of the net income on this. So our cash flow statement will actually turn positive, we estimate, about a year before our income statement will. And the reason I give that background is because on 100 megawatts, to use that nice round number, we would expect to pick a conservative number in excess of 20 million of developer fee to come out of those projects just as we build them, and then positive for cash flow from the projects through the operation as well. So to your question there's the 5 or 6 million of overhead. We're going through this period of time right now where we're getting closer and closer to being cash flow positive, and excited for getting to that point soon. But yeah, it's really that kind of goalie we're getting through as these projects get to construction and go through that phase.
Yeah, I mean, you're right. It's the business is so much more than the current financial statements, because if somebody looks at them, you're missing where the asset sort of creation is. This is a back-ended type of business where the real revenues and earnings are going to come once those projects are built. And I guess the question is, what's the certainty of that backlog getting built out? What prevents 145 megawatts from getting built?
So I'll say that 145, there's some very specific requirements for us to count to this backlog. Like we need to have a contract with the landowner, etc. But then there's also this like management check. Like we believe that project will get built. And there's a little bit of variation that can occur. An astute shareholder asked about, on that last slide, there was a bit of a shift, 1.425, 1.519, that bottom row. That was because one of the projects ended up becoming a bit bigger as we built it out. We revised the design in the last moment. But in essence, at 145, maybe 10% slips or something like that. But those are the projects that we fully expect to build at this point in time. And then what the part that slows us down the most, to be honest, is the speed at which utilities work. And it's almost like a good enough for government type of mentality over there sometimes. They're not government, but I think that monopolistic nature of those companies. So and people following the story, so as great as the backlog growth has been this year, we had expected to build out a few more projects this year. And in Maine, Maine has been a very fast growth market. On the one hand, we were in there very early, but what's happened is utilities have just been overwhelmed with approving these. When I say approve, it's not just a rubber stamp. They go through a study to understand, does the grid need to be upgraded to take this project, et cetera. So that's been the thing that slowed us down the most. And to the point that if I maybe I'll just throw up the back, really any one of these kind of backlog stories here. The in project development, these different stages that we have a lot of projects in stage 3.1 right now. As you can see, our backlog is mostly in that stage. And so we're getting everything else done as we wait for interconnection. Interconnection is the requirement that kind of allows us to move these projects through. So we actually have projects in 3.1 right now that we expect to have in stage 5 or stage 4 and 5 by the end of Q1 that we're really just waiting on the interconnection final approval for to move things through. So I think even in Maine, there has been, as utilities have staffed up and got more familiar with these things, et cetera, like we are expecting these numbers to really start shifting next year.
So, I mean, more to that, like when I look at the 145, can you give us a sense of how many years worth of backlog is that? How, what are your limitations to installing as far as like your limitations outside of, utilities and whatnot? Could you install 145 megawatts right now?
Pretty close. Our biggest holdup is really the timing of getting the schedules approved by the interconnection. I feel like the platform is there, right? Like I feel like the leadership is there, the platform is there. Not to downplay the importance of our project managers, but if we're installing 10 more projects, then we'll hire maybe 2 or 3 more project managers on the ground to be there watching over our subcontractors who are actually doing the build out. So I feel like the platform's there, and it's really for us a matter of seeing those approvals come through the pike and us be able to build out those projects.
And then just I guess in general a timeline, like what sort of you expect it to take to get that amount built out?
Yeah, we in our Q3s, 25 megawatts is sort of like a baseline of what we expect to build out next year to add on to what we've done so far, with the possibility of being in excess of that. But that is a baseline. But if we back up, the total time frame we give is about 9 to 36 months based on a project, with it being about 18 to 36 for our larger projects. And our backlog is more and more weighted to the larger ones. So most of our backlog 18 to 36 month type time frame. So 2023 will be another sort of multiple in terms of our build outs over 2022 based on when we secured these projects and so on.
And what level of megawatts do you think you guys need to sort of be operationally break even?
Yeah. Okay. So on a cash flow basis, triangulating through some of those numbers I said earlier, we think that on an annual basis, we need to be building about 25 to 30 megawatts right now. So on an annual basis, therefore next year we're getting quite close. And on a quarterly basis, we expect to cross that threshold of cash flow positive by the end of the year. On an income statement basis, that is it's not about the developer fee at that point. It's about this recurring revenue. And so I'm doing a little bit of mental math as we speak here, which is always a little bit dangerous, but it's operational assets are therefore I want to say it's in that 40 plus megawatt range, which puts us into 2023 at some point.
Yeah. Okay. Perfect. So, I mean, listen, you touched on a little bit of the Build Back Better program and some of the other sort of programs out there. Is there anything else that sort of you're hearing or stuff that's happening within the industry that you think is noteworthy?
Probably the 2 other points I'll mention here quickly is that Department of Energy, they came out about 2 months ago with a goal to grow community solar by 8x by 2025. So in 4 years. So we feel that's very substantial. If I just flip over to another slide here real quick, just to give a sense, the top residential solar companies right now are I think Sunrun's about a $9 billion market cap right now. I think they had topped out probably closer to, I don't know, high teens earlier in the year. And that's in the residential space. So the second green dot there, the goal by 2025, which is going to come quick, as we all know, is about 1.5 times the residential space. And this is a very nascent industry, and we're right at the forefront of it. So we think that there's a real opportunity to be, or the real leader in this space, and have a sense of what that means for a valuation standpoint. So there's that. I'll just dangle the carrot here. There is this company that just started trading on Friday called Altus, AMPS on the NASDAQ. And it gives us a sense about linking together some of these points we've talked about, like what is 100 megawatts worth in the public market to a larger company, et cetera. And actually, the other thing is, I think the term community solar, I always feel sounds a little bit cottage industry. I think it's like an industry term. It is, again, like the fastest growing part of the solar industry. It's more of an industry term than a capital markets one. If we went back and looked at our deck earlier in the year, I would estimate that probably about 50 to 60% of these states were colored in. So through the year, we've had like state after state introduce legislation around allowing for community solar. There is a federal bill that hasn't gotten too much traction yet, but I wouldn't be too surprised to see something like that happen. But in essence, on a state level, we're continuing to see progress. I expect North Carolina to flip over soon, Georgia. There's a good amount of activity in California, activity happening behind the scenes as well. So that allows us to really spread our wings in terms of where we focus here too.
We just had a question in from somebody who's listening. See if you can answer it. If I take the 145 megawatt backlog and add 100 megawatts for Mass, assuming that's Massachusetts, that equals 245 megawatts BL, assuming an 18-cent US per watt revenue. This equals, there's too much math here. This equals US 43 million annual revenue, not including what will still come from the pipeline. Does this sound right? Does that sound close?
Yeah, two quick things. Number one is Massachusetts. It feels like it's been so busy. I glossed over that pretty important point, but in November, I think it was 21st, we announced an expansion to Massachusetts. And at that point in time, we had already exceeded 100 megawatts of like signed client commitments. So that wasn't in our backlog yet. It was just starting to trickle into the 145 that we had on November 22nd. So I think that's where that number is coming from. So we thought that was a pretty meaningful, it is a meaningful expansion to Massachusetts. So I think we're expecting that nearly all of that 100 megawatts will become backlog, the vast majority of it. So anyway, so 145 other things we have going on. There's also the 81 site LOI, which hasn't been in backlog yet. So, do I see a near-term pathway to 250? I do. And then the question was about the math. I'm forgetting the numbers already, but I'll just say if you times, the numbers we talked about from a revenue perspective, if I used 18 to 20, we're talking about getting close to 50 million. So I think the number you shared there, Paul, was 40 something. So
43, yeah.
Yeah. So from a recurring revenue standpoint, that's the right number to be in. Yeah.
Perfect. Listen, in the last year, we've heard a ton of stuff and issues around sourcing materials, supplies, components, things like that. Are you guys facing that sort of stuff?
Yeah, I think everybody has had supply chain disruptions, right? I'll say that in terms of the projects that we have built or are building, everything has been, actually everyone but one has been at or below budget. And one of them, we always hold contingencies in our project. And one of them ate into that contingency because the panel prices were higher than we originally forecast. That's sort of everything we've touched this year. So I think kudos to our deployment team for finding, having the contacts and so on to find what we needed to. that said, we benefit as the costs go down. And so we're really hoping that the supply chains work themselves out in 2022. And we see good signs there too. Like actually, this is something else I could have added on that prior slide. But just in the last month or so, we've had the Biden administration come out with they scrapped some tariffs on bifacial panels. They, in a sense, like turned away some potential tariffs on Southeast Asian manufacturers. And they also made something a bit simpler around a forced labor issue in China around anything made in Xinjiang, China. So we're seeing the Biden administration be more positive towards that. And it ties closely to the Build Back Better Act, because what we're being told is there's the shift from stick to carrot about providing incentives for people to manufacture in the US and so on. So all that's a long-winded way of saying in 2022, we're expecting to see costs really start to go back to that curve we've seen over time.
And another question here in regards to sort of pricing. Let me see if it just where to go here. How are your revenues impacted by inflation? Are they adjusted for CPI year over year?
So the short answer is yes. The way that so in our contracts, some of them have a fixed percentage. It'll say, okay, 1.9% per year or something like that. In like the T-Mobile contract, that's the way that one is. It has a fixed number. A lot of our contracts will increase with inflation, so more of like a CPI type of measure. There's actually yet another, positive to us. I hate to see other people needing to pay more for energy, but Maine, as an example, these projects that we're building out in Maine next year. So the Public Utilities Commission in the state publishes the standard offer rates that customers pay around this time each year. And so when those were published a week or two ago, there was an 80% increase in the price of energy in the standard offer rate. We assume an inflation rate of, I think, 1.5. So that represents a huge upside to us in terms of revenue and margins from those projects. So that's again, long-winded way of saying we do see the returns we're getting increased as inflation increases.
Gotcha. We'll take one more question here, and this is clearly somebody who's done their homework. How can you come up with actual revenues from each origination through each stage to cash flow to equal 81 cents per watt?
Okay, yeah.
What exactly is this 81 cents per watt net retained value?
Yeah, so let me flip over. This is an example. This is one of our New York City projects, but I think that the couple things to keep in mind. So number one, so what this is a discounted present value of the net cash flows from the project. So over the 25 years, say, of a project, this is a 25-year asset, I remember, that is that net cash flow and discount is the present time, and we use 8% for the discount rate, which is an arbitrary number, which we think is a bit conservative compared to where the industry is at. So that's what that is. How the cash flow comes to us is part of it is what we extract as we build it from the developer fee that we talked about earlier. And then the rest of it is from the project cash flows over the life of the time. So 81 cents, we do mention elsewhere in the presentation that 50 cents to $1 is a wider range. Different states have different economics, different size projects, etc. We did sell one of our projects just over a year ago. On that one, I think we netted $1.10. So there is a range here, but that's what that is. And the other thing I'll say is, I think looking at our income statement, and Paul, you mentioned this earlier in a similar vein, I think looking at our income statement really doesn't link up, in our opinion, with the value that we're building right now. I think we're excited for this Altus company to be trading now, because it finally is a somewhat of a public comp versus UGE, because they own some of our projects that we sold to them back in the day, but they hold very similar assets. I don't have their recurring revenue number in front of me, but I believe it was in like the mid tens of millions, like below 50. I believe it was something like 40, and their market cap's 1.6 billion. Why? It's because of the 25-year nature of these assets, and it's also very high margin. We haven't really talked about that, but like our gross margin is 80+% on these recurring revenues, and then also represents the value in the backlog that we're building too, right? Like these are assets, even though they're not generating revenue yet. It's, it's like, yeah, it's like we're building a condo. We have the land, we have the permits, etc. So.
So is Altus, is it like a true comparable, or is like what you guys do is sort of a piece of what they do? Give me a better sense of what they're all about.
Well, they're bigger than us, but what they do is a piece of what we do. And so it's actually the opposite. Yeah. So, on the one hand, we like having them as a comp and being able to say, like, hey, look how undervalued we are. But the two things, number one is like we develop our own projects, whereas I don't believe they publicly disclose the split yet, but my understanding is the vast majority of what they have, they're buying off of developers like UGE. They were the first ones we sold a project to. So because of that difference, like if we let's say in our MD&A we give like a capex assumption, but let's say that we're spending $1.40 to $1.80 per watt on creating these assets. I know that the Roth research note that I was reading last week, their assumption was $1.60 to $3 a watt for creating the same assets. What's the difference? The difference is that difference is if we sold our projects, right? The difference is what they need to pay extra to buy these assets off of other developers. So that's the biggest difference, is we're true full life cycle, whereas they're buying these assets for the most part.
Wow. Okay. Well, listen. We'll wrap up here shortly, but from the investor standpoint, we always like to ask this question. But over the course of sort of, let's say, the next year, what sort of catalysts or metrics should we pay the most attention to see that you guys are continuing to execute on your business?
Yeah, so number one, if I just go through like the life cycle here, number one is the backlog, and I think like Massachusetts, when we announced 100 megawatts, I don't know if our stock moved that day. I think that there's a disconnect there, but in the industry, like in the industry, we know we know how much that's worth, and I don't think the capital markets are giving us appropriate attention to that yet. But it starts with creating those assets and then seeing them mature. And I think one of the ways that we're going to see us start to get value for that backlog is to deliver on more of those projects, right? As more of those projects become operational and people start to realize that all the experience we've had with the 500 megawatts of experience is helping us see that happen. I think that's an important catalyst too. And 2022 is going to see a lot more projects of ours get built out. So there's those two things. We kind of glossed over the Build Back Better Act a little bit. Our sources are still very optimistic that it's going to be passed. February is sort of the over-under that we're seeing right now. The value that provides a company like UGE. I know 8 Capital had a research note last week that said that UGE was the #1 beneficiary of the Build Back Better Act within their universe. And so that tax credit I mentioned earlier, it goes from a 2-year, a window of 2 years for that tax credit to a 10-year extension. It ups the amount of that tax credit to the 30% that it was for most of its lifetime. Just under Trump, it dropped to 26. It provides a direct pay. So instead of selling that and losing, say, 20% of the value, it means we can get a grant directly from Treasury, etc. So and there's also some adders for low and moderate income communities where a lot of our projects are. There's just so many benefits to that. That I think is a real catalyst for what we do and the speed at which we do it too, because we no longer need to go out and find tax equity buyers and so on and so forth. So there's that. And then lastly is, the partnerships we have with Bloomberg and T-Mobile and this REIT we've mentioned and so on. We're expecting that as 2022 goes onward, we'll continue to grow our profile in those types of ways as well.
And then Nick, lastly, just a key message, key takeaway, anything you want to make sure that everybody walks away with today?
I think I would say that we're a very fast growing company in the fastest growing part of the solar industry. And so if you believe in the solar industry, then you don't need to be a total fanboy. If you believe that this is there is an energy transition going on, and then you look one level deeper and you see that the mid-scale space is the fastest growing part and expected to be the fastest growing part for the next decade. And then you see that UGE was the first one doing this project in New York City, the first one in Maine, and you see that we are on the cutting edge of this industry and what we're doing. there's just a lot of potential there. So we talked about the other points on this page already, but we're really excited for how the teams come together, how the growth has really picked up even more so this year. So appreciate everybody following the story, and you can reach out anytime. But really appreciate it, Paul and Trevor, as well, for having us on.
Perfect. And if somebody does want more information, what's your website address, or what's the best way to get in contact with you?
Yeah, so my email and phone number are here. Sophic, who probably many people know, Sophic Capital, you can reach out to them as well. We should add it to this page. investors@ugei.com hits all three of us, so that's the easiest one. Website ugei.com as well. And then, of course, try to make sure announcements are out there on Twitter and all that good stuff too.
Fantastic. Well, listen, congratulations on a remarkable 2021. Lots of progress. So we look forward to 2022. Sounds like you guys are not going to take a break. You're going to keep moving forward as fast as you can. And Nick, it's always great to catch up with you. So we really appreciate you dropping by today and updating us all.
Yeah, my pleasure. Thanks again, and happy holidays as well.
Fantastic. We've been speaking with CEO Nick Blitterswyk of UGE International, symbol UGE on the Venture Exchange. Nick, Merry Christmas and happy holidays to you and your family.
Thanks again. Take care.
Okay. Thank you.